Hello, everyone. So let us now continue with the third session of our revision, wherein we are going to talk about a very, very important topic of audit, which is called as procedures. Okay. As we have already discussed about the sequence and how we are going to prepare. So based on that, we have already completed the topic of risk assessment and planning. We also understood how audit evidence is collected. In the previous session, we have also taken up about everything regarding internal control, where we spoke about the systems and the control, and also about the internal audit. Moving on, now we are going to go to the third set of the chapters, where in the third clubbing which I've done, I've taken only one chapter, and that is about procedures. Okay, so this particular chapter is actually by size itself or by understanding itself is very, very large. Okay, it's one of the lengthiest topic that you have, and it's not difficult one, but it is only the thing that the approach in which you prepare the answer has to be very, very important. Okay, so this topic which talks about procedures is talking about substantive procedures. So as audit, we have now, since we already understand the basic understanding or the basic concept is very clear to us, how audit is done. So we know audit, we first have the engagement letter. Then based on that, we understand the scope of our work. Then we are going to have a discussion with the management, decide the audit procedure that is going to be the planning, how we are going to plan the audit, then do the risk assessment. Then we are going to check into the controls. And if we believe controls are good, we'll perform the test of controls. Based on the result of test of controls, we will then go on deciding the substantive procedures. Correct? So today's session, the revision that we are going to have is with regard to these procedures, which are the ones which are called as substantive audit procedures. So on a broader framework, what do you mean by substantive audit procedures? Now, in audit, we are going to give opinion on the financial statements. So we are required to give opinion that whether the financial statements are going to give a true and fair view or not. So we are required to obtain reasonable assurance as to whether the financial statements are are free from material misstatement or not, or whether they give a true and fair view. Okay, now financial statements include balance sheet, P&L. Okay, so these particular statements, the notes to accounts and all, these have n number of items in it. Okay, so what happens is when the auditor, as a part of his audit process, looks into the controls and tries to understand the control, even if the controls, what he understood or what he has checked, happen to work really, really well, if they're very, very effective, even then the auditor cannot finish his audit and say, yeah, controls are operating very well. That means financial statements are going to be free from a statement. The answer to this would be that this is a wrong aspect of what the students understand. Very clearly, control checking is only a part of the audit. But the main crux or the main procedure through which the audit has to be completed or through which we have to actually obtain sufficient appropriate audit evidences is by performing the substantive procedure. The only reason that we perform test of controls is because we need to understand how much should we do the detailed checking. Like out of the 10,000 transactions, should I check 500 transactions? Should I check 50 transactions? Should I check 100 transactions? What should be my sample size? That is what we are going to take a decision based on our testing of control. So control testing will be done to understand how much procedures have to be applied on the items of the financial statement. So balance sheet, every single item, you talk about liabilities, you talk about assets, you talk about share capital, reserves. Okay, every single item we have to pick up and we have to check them in detail. This detailed checking, we call it to be substantive procedure. We call it to be test of details. So basically, it can be possible that audit includes only substantive procedures, but there cannot be a possibility that audit is including only control testing, test of controls. No, always the auditor could have a combination of test of controls and test of details. But there cannot be that you do control testing and you have the opinion. We are not going to give an opinion on the controls. We are giving opinion on the financial statement. So substantive procedures become very, very important because that is the core part of the audit where every item of the financial statement, bank transactions, purchases, sales, non-current assets, non-current liabilities, intangible assets, fixed assets, everything, okay, inventory, we are going to pick up and we are going to check whether they are correct or not, or correctly reflected or not. Correct? Now, this is what is the procedures or about what procedures are we talking. So this topic, which we are going to discuss now, okay, the revision of which we are going to take up, which talks about procedures. These procedures are substantive audit procedures. That means the items of financial statements, when we start checking them, then in that case, what procedures we are going to adopt are called as the substantive audit procedures. We have also gone through the type of procedures when we did the topic of evidence, inspection, observation. All of these are nothing but procedures. But in this topic, what you are going to understand is in a particular risk, when we know about a particular risk or when we need to validate a particular assertion, based on the assertion, you have to decide what procedure has to be adopted. Like, for example, if you're checking valuation of inventory, then for checking valuation, what should be the procedure? If you're checking the condition of the inventory, then what will be the procedure? If you want to check about the existence of the inventory, okay, then what will be the procedure? So every time the auditor has to first understand what assertion he's going to check. Based on the assertion, we are going to apply the audit procedures. Got it? So we are now going to discuss everything regarding substantive audit procedures. All right. So let's get started. So this is the beginning of the sessions that we had. I had given you the entire framework. Then we also discussed the question paper pattern. And then we also spoke about how the revision session is going to be. If you can see, we have finished the planning part, internal controls, and now we are moving on to the third one, that is procedure. Okay. Then moving further, we did the first topic, okay, first part of the discussion, which included three chapters, chapter 5, 6, and 7 from the study material. Okay, so that discussion we have done in detail. We picked up all the concepts and we picked up each and every concept and we spoke about it. Then in the previous session, we took the next club or the next group of our chapters, that is systems and control and internal audit, which from the study material are chapter 8 and 9, and which basically talks entirely about internal control. Okay, so here also we had the same approach. We picked up all the concepts. Some concepts I went through the study material, and also we picked up the question from the exam kit. Okay, so that you get a clarity about the kind of questions which could be asked in the examination. Okay, so this we have picked up on all of them and we have understood it. Okay, then we also did internal audit and we understood how every organization, depending upon the size of it, will have a separate department of internal audit and how employees have to be working, what should be their qualification, which is considered to be a good internal control. Is there going to be a limitation on internal audit? All of that we have already discussed. So moving forward, we are going to now take the chapter that is procedure. This chapter in the study material is the chapter 10. Okay, the chapter 10, which talks about procedures. All right. Now, as I told you, these procedures are substantive audit procedures. Understand, in audit, we have two procedures, test of controls and test of details. Test of details is nothing but substantive procedures. And this topic is basically talking about these substantive procedures. Okay. Now, first thing, clear instruction on how audit evidence has to be obtained. Now, substantive procedures should be designed in such a manner that it is going to give a clear instruction to the entire audit team of how they are going to obtain the audit evidence. So basically, if you talk about salary, if you talk about sales, then based on that, the auditor is going to decide about the assertions. So first thing you have to decide, which assertion are we validating? Are we checking the completeness of the sale? Are we checking accuracy of the salary? Are we checking occurrence of the salary? Are we checking the measurement of the sales, the valuation of the sales? Okay, what are we checking? First, you have to fix on the assertion, what we are going to check. Based on the assertion that we have decided to check, then we have to clearly understand how audit evidence have to be obtained. And this how is, what is the procedure? Got it? So basically, procedure is nothing but a clear instruction on how evidence will be obtained. Okay. So how we do the audit, what steps we are going to take up are nothing but the procedures that we are talking about. Okay. So basically, procedures will tell what needs to be done, how it has to be done, and why it should be done. Everything should be clearly told. What needs to be done is what is the procedure? Should we inspect? Should we observe? Should we recalculate? Should we perform analytical procedures? What has to be done? How? What should be the sample size? Which documents we have to check? Which area we have to check? Everything is going to talk about how. And then why it should be done. Which assertion are we validating? Because we want to check the completeness of the sale. Do we want to check the accuracy of the sale? Should we check the occurrence of the sales transaction? What are we checking? So basically, based on that, we need to understand why. Okay. So when you design a procedure, the procedure should be able to answer what should be done, how it should be done, and why it should be done. All of that. Okay, then the procedure should be so clear that it should be talking about action applied on the source to achieve objective. So very nice understanding is given about the procedure. What is the action that the auditor or the audit team is going to apply on the source to achieve the objective. Now, objective is not difficult to understand. Objective is the assertion that you are checking. Okay, so suppose you're talking about valuation of inventory. So the objective is you need to check the valuation of inventory. So this is your objective. Okay, so to check the valuation, the objective is to check the valuation. So you have to look into what source would be available. So what documents are available? What are the other evidences that are available? What all receipts, what all documents are available for you to check? So you are going to apply the action on the document so that you get the evidence regarding valuation. That is the objective. Okay, so procedures are designed in such a manner that it talks about the action that is to be applied to the source. Source is nothing but the available evidences to achieve the objective. Objective means which assertion are we checking? Okay, then action, I told you it is a procedure, and objective is nothing but the assertion that we are validating. Okay, now there is something very important that we have to discuss. In the study material, they've given a very good way of understanding how the exam approach should be. So whenever a particular situation is given to you and you are asked to give a particular audit procedure in that particular area, then understand the way you give the answer should be that you have to identify which assertion you are checking, and based on that you tell the action that you are going to apply. It should not be that you're giving any generally audit procedure. No. Like for example, if they ask you about trade receivables and they're asking you regarding valuation of the trade receivables, then your answer should be the action that you are going to apply on the information that is available to achieve the objective, that is valuation. You cannot tell any and everything with regard to the receivables. So you can't talk about existence. You can't talk about completeness. Those things you don't talk. So you need to understand they're asking about valuation, right? So your answer should be specific regarding valuation only. Okay, otherwise usually students, what they do, if they want to give a procedure for receivables, then without thinking anything, every and anything about the procedures regarding receivables, whatever they know, they go on writing everything. So that is not the approach. So let us have a reference to the study material and understand what approach is expected and how you are required to give the answer to this. Okay, how we call it to be to the point answer, and which is considered to be a very good answer. Okay, so here if you look at it, they have told you writing a good audit procedure. So how do you identify how you have written a good audit procedure? Okay, now so look at this. What will be the correct answer? Okay, first of all, okay, the objective, that is what you have to check, is test the existence of the non-current asset. So the objective is to test the assertion. What is the assertion here? Existence. Existence means whether it is really there or not there. So now in this case, existence of non-current asset. Okay, now here very clearly the answer should be only pertaining about how you check the existence. Now let us take the example of a non-current asset to be building. Okay, now whether building is really in existence or not, for that are you going to look into the title deeds? Okay, are you going to look into the book valuation? Are you going to see how the calculation of the cost is done? Are all these going to give an answer for the procedure to check existence? No. If they would ask you valuation, correctly you would have said. If they would ask you about whether really the company has a right over the building, then you'll see the title deeds and everything. But then tell me, here the assertion is what? Existence. So your answer should talk about how will you check whether building is really existing or not. For that, you will conduct physical verification. So the answer will be what? That you have to conduct physical verification of the building there. Only then, what is your objective? To check existence. That will be fulfilled. So look at that. Select a sample out of the assets from the non-current asset register. So every company will maintain a register, correct? Register of the non-current assets. So all the non-current assets, plant, machinery, building, okay, land, whatever you have, everything, a list will be maintained. So if you want to check them, obviously all you are not going to do physical verification. So you're going to pick up a sample. So from where you are going to pick up the sample? From this register which is maintained. And then understand, because existence you have to check, you will do physical inspection to verify the existence. And look at the bad answer. Check sample of the asset. For what do you check the sample of the asset? Asset sample could be checked for valuation also, for completeness also, or for rights and obligations also. For any purpose, you can check the sample. So that is not an answer only that you have to give. Rather, you have to tell very clearly how, on what, and for what purpose. Everything should be given clearly. So that will be considered to be a good answer. Similarly, look at the next one. What they're telling. Why is this considered good? Because the sample from where it is chosen, you have told. Then how they should be checked, physically you inspect. And why? Because you want to check existence. Correct? Then one more example is given to you. Here the assertion to be checked is valuation. Test the valuation of trade receivables. Now for valuation, obviously physical inspection you won't do. Okay, obviously trade receivables physical inspection is not going to be there. In fact, even you will not send a circular. For example, whenever debtors, a trade receivables will come, debtors balance checking will come. Students have a very clear understanding. Will send external confirmation. Usually students have only one thing to write about debtors and they say what, we will send external confirmation and we will understand about the debtors, replying to us and we'll understand about the debtors. Understand, external confirmation will never give you the answer for valuation. They will definitely give you for existence, agreed, because if the debtor replies and all, you'll understand debtor is there or not there. But valuation of the debtors includes provisions also, includes provision for bad debts also. How you will understand with the reply of the debtor? So external confirmation, okay, it is acceptable if you wanted to check the existence. But definitely it will not be okay if you want to check the valuation. If you want to check the valuation, then you have to check for, in debtors, how we value debtors, trade receivables, less you will have the provision for bad debts. Correct? This provision will depend upon the recoverability. Correct? So here you need to understand regarding the payments, whether received or not. Okay. So here the good answer will be inspect post year end bank statements to identify payments have been received post the year end. If so, agree the amount to the receivable ledger at the year end. Then only you will be understanding whether valuation has been done correctly or not. But if you look at here, if a bad answer, they will write about receivable circularization, nothing but external confirmation. Now, this is not going to confirm about the balance. It will talk about existence, whether debtor is existing or not. Correct? So you need to understand that not only the procedure should be correct, you should also be able to understand what assertion has been questioned. And for that assertion, what procedure has to be adopted. You cannot talk about any and every procedure, whichever question is asked to you. Okay? So that exam approach, you have to be very, very careful. Okay? Then, moving on further, now comes to the next part of this topic that talks about directional testing. So whenever the auditor does audit procedures for checking the assertions, there is a directional testing done. Directional testing is very simple. It says, I will check one particular transaction, automatically other also will get checked. And if there is a risk in one, automatically the other also will have a risk. How? What is accounting? Double entry system of bookkeeping. So every debit will have a corresponding credit. And every credit is going to have a corresponding debit. So that is quite understandable. So what is the understanding here is, usually the auditor's procedures will be framed that he will check debit balances, assets and expenses. And on the other side, credit balances is going to be liability and incomes. Correct? So what he does, if he checks the assets, okay, if he's checking the asset, okay, debit balance, automatically credit balance also he will be able to understand. Correct? So here you need to understand, if one mistake is caught, automatically the corresponding mistake also will be acceptable. Okay, so if you talk about you purchased an asset on credit, so you will have asset checked. Okay, so if you're checking the asset and if there's a misstatement here, that means that particular creditor's balance also will be wrong. So one debit will correspondingly show other credit also which could be wrong. So one testing is giving a direction to what other also could be wrong. Got it? Similarly, expense and income, you can match very easily. So if you understand sales is wrong, corresponding purchases also there could be a possibility of misstatement. Corresponding to that, debtor's balance also could be misstated. So through one, you'll be able to understand many things. So basically, the auditor will test for overstatement. Overstatement will look in for assets and expenses. Okay, and understatements will look for liabilities. Okay, obviously, usually the clients will try to show a better position of the financial statements and all. So because of that, we go on for looking into overstatement of this and understatement of this. So when you check the overstatement, you'll be able to test the assertion for existence. See, overstatement, if you're checking for a particular inventory balance and you're looking for it to be overstated. Overstated means what? It is not there, but they're writing it. So you'll be able to understand regarding whether it is really existing or not. And if it is not existing, they don't have right only about it. It never occurred during the year. Accuracy is not there. Valuation is not there. So all these assertions you'll be able to identify properly if you check the overstatement of a particular transaction, of a particular asset. Similarly, if you check for the understatement, I told you liabilities, basically we go in for checking understatement. Understatement means you will understand something has been omitted, so it is not complete. That means calculation is not accurate. Valuation also could go wrong. Got it? So both overstatement will help you understand certain assertions. Understatement also will help you understand certain assertions. So when you look into for directional testing, you will check for overstatement. You will check for understatement. Overstatement will give you an idea of few of the assertions. Understatement also will help you through understanding few assertions. Got it? So this is the way in which we do the directional testing. Directional testing simply means for every debit, obviously corresponding credit is there. So you check one, if you identify a risk here, risk of material misstatement, automatically corresponding to it, whatever credit balance is available, you will check that also because there is a possibility of material misstatement. Okay. And basically this we do by checking overstatement and understatement. Overstatement will help you understand about these assertions and understatement will help you understand about these assertions. Okay. See, substantive procedures on a broader framework is only validating the assertion. Whatever management says, yeah, this is the value, then we have to check whether really it is the value. Management said this particular building is there. Is it really there? Management said all the documents, all the records we are having, all the sales transactions have been recorded. Okay, we'll check whether everything is complete or not. Management says we have accurately measured everything. We'll say, okay, we'll check whether you have accurately measured everything. So whatever management is telling, that is the assertion. And what auditor is doing, that is validation. Got it? So these are all the assertions made by the management, which now the auditor, by performing substantive audit procedures, is going to validate. And that is the way through which we'll be able to obtain sufficient appropriate audit evidences. Clear? All right. Now I have taken here for the revision purpose, two examples. I'm picking from the balance sheet two particular items through which you'll be able to understand how substantive procedures have been performed. Okay. Now the way in which you have to understand this is that, first of all, look what is the particular item which is picked from the balance sheet. So if you look at this, I have picked up bank and cash. So as a part of the asset side, okay, you have bank balance. Okay. First, you have to check whether which assertion are you checking. Then you will see what are the source of documents available or what is the source of evidence available with you. Source of evidence means from where all we can obtain evidence. So in bank, you can obtain the evidence from the banker. You can obtain that is external confirmation from the bank you can obtain. Then you can have the bank book. Then you could have the other records like the all the payments made, receipts and payments are there. So all these vouchers will be available. So there are multiple sources available through which you'll be able to obtain evidences. And based on understanding what all sources are there, then we'll decide what are the procedures that we are going to follow to validate all the assertions for the bank and cash. All right. So now we will go through the study material. I will take you through the exact page where bank and cash procedure has been given. You will understand first they're looking into for the which assertion we are going to check. Then what are the possible evidences available to check the bank balances? And finally, how we are going to apply the procedures while performing the particular action to obtain the objective. Okay, or to actually get on the objectives. All right, so let's have the sharing of the particular bank and cash procedures. If you read one, automatically you will get an idea of how the answer has to be written. But this topic you require thorough practice, okay? Because there's a lot of content involved and this you'll be able to understand only if you have a practice over that content. So this is what we are going to discuss now, how bank and cash transactions are checked. That means how do you apply substantive audit procedures on bank and cash, okay? Now look at this. First of all, you pick up the assertion that you're going to check for bank. And for bank, the most important assertions are going to be whether bank money is really existing and valuation. Okay, then sources. You can get a bank confirmation letter. You have bank reconciliation statement. You have the cash book. You also have bank statements. So these are all the four sources available from which you will obtain evidences. So you can check the bank confirmation you can give for an understanding of the existence. Bank reconciliation will help you understand the valuation. Cash book bank statement will also give you the understanding of the valuation. Okay. So these are the sources which are available with us through which you can obtain evidences. Now look at the way how it is performed. The bank and cash included in the financial statement must exist and be included at the appropriate amount. So it must be existing also and it should be at the appropriate amount. The cash book figure is the balance which should be included in the financial statement. This may differ to the bank statement balance due to timing difference. We know why we prepare the BRS. BRS is because there could be a timing difference between cash book and the bank statements. Okay, so they will not match. Okay, therefore the bank reconciliation must be reviewed to ensure differences can be explained. So obviously when the checks are issued but not deposited or not presented, or when the checks are collected but still not deposited for collection, okay, there could be multiple timing difference because of which the cash book will show a higher balance and the bank transactions would show a lower balance, the bank statement. So these are the differences that will be arising in both of these documents, but we will have a BRS prepared. When you review the BRS, you'll be able to understand why the difference is there. Okay, then. The bank confirmation letter is you send it to the bank manager. A letter will be sent to him to provide direct confirmation of the bank balance from the bank. It is a third party, independent, written evidence and therefore very reliable. So in order to obtain the bank confirmation, it is considered to be one of the reliable evidences because it is coming from the outside party, independent source, it is in writing, and obviously it is outsider, so it is going to be always reliable. And we studied as a part of audit evidence topic, how to understand which is more reliable. So all these things, independence, written evidence, okay, all this shows that yes, it is a very, very reliable audit evidence. Then the client must give permission to the bank to release this information to the auditor, as they too have a duty of confidentiality to their client. So bank also has a code of ethics. So obviously the bank will first have the communication with the client, and if the client permits the banker, then the banker will release the information. The confirmation request should be sent a minimum of 2 weeks before the client's year end. The letter should include enough information to allow the bank to trace the client. The confirmation letter will be sent by bank directly to the auditor's office. Now, this last point is very important. It should never be routed through the client. That means the bank should not send it to the client and the client will hand over to the auditor. That should not happen, because if it is done like that, tampering of the data will happen in between. Okay. So you can see here, they've given you a pro forma of how the letter will be sent, so that you'll be having a study material with you where you can quickly go through it. It's quite understandable. Then, where cash in hand is material and when fraud is suspected, a cash count should be arranged to verify the existence. So cash balance also, if you want to check the existence, it is very important that you go for physical verification. The auditor should make sure that all the cash balance are counted at the same time to avoid manipulation at the balances between different sites. Meaning is bank will have different locations. So see that you send your entire audit team at one point of time to all the locations. Otherwise, cash can be transferred from one location to another. And they would do all the arrangements to, whatever is shortfall and all, they can make it very easily recoverable. So if there are 4 branches, all the 4 branches should be checked at the same time, so that movement of cash does not happen. The auditor should always be accompanied by a member of the client staff to avoid any allegations from the client of theft by the auditor. Obviously, cash is very liquid. Okay, so if there are cash is shortfall, like there's a lesser amount of cash recorded, then the client will start blaming the auditor. He must have taken it. So obviously, you should always accompany with a client's member. The details of the cash count should be recorded, such as the location counted, the amount counted at each location, the client staff present, the auditor performing the test, and the date performed. So these all will be entered into your documentation. So if you look at it, if you really have a proper understanding of it, here they're telling you about how procedures will be performed. But basically, I am not taking you through the exact procedures of how the assertions are validated. Only 2 things I've picked up on here. How you will understand how amount is existing. Existence you'll be understanding through the sending of bank confirmation request. And valuation you'll be understanding with the base of BRS and reviewing the BRS and understanding about the timing difference and all of that. Cash, the physical cash you'll be able to understand by doing actually the physical count. Okay. And for that also, you have certain precautions to be taken, that you do all the counting at one particular point in time, see that everything is done together along with the management, everything has to be recorded properly. All of this has to be taken care of. So that is the procedure with regard to bank and cash. Okay. So that was a simple one, but we'll take one which is a little bit more exhaustive. Okay. So the next example that we'll take up for the purpose of performing audit procedure is the non-current liabilities. Okay. Now, non-current liabilities. Okay, non-current liabilities are nothing but loans. Okay, long-term creditors that you have. Okay, so these are all considered to be what? Non-current, long-term. Okay, the assertion that you are going to check, very, very important for liabilities, will be completeness. Most of the times, the clients will do a manipulation here. They will do understatement of the liability. Understatement as in few of the liabilities they don't show only. So because of that, it is very important you check that the liabilities are completely recorded, and then comes valuation. So 2 important assertions with respect to non-current liability, which the auditor will check, is going to be completeness and valuation. Okay. The type of evidences available, you can think by yourself only. If I want to check the loan agreement will be available. Then all the payments will be happening. So cash and bank statements will be available. Then obviously you take loan from the bank. So bank also can give you confirmation. So bank confirmation letter also will be available. So these are the multiple sources of evidences available with whom the bank, with the auditor. When he wants to check the non-current liabilities, you can keep one example in your mind regarding loan. So if I want to check loan agreement, I will check. Bank statements, I'll check for the payment purposes. And then also I will be checking about I'll send an external confirmation to the banker and I'll ask him about the loan outstanding balance and all that for the purpose of understanding the valuation. Okay. Then, now here further they say, the loan balances must be complete and valued appropriately in the financial statements. Allocation must be assessed as the client should show how much of the loan is due to be paid within 1 year, okay, which has to be included as current liability, and how much loan is due to be paid outside 1 year, that is non-current. See, we are checking non-current. So classification should happen correct with regard to current liability and non-current liability. The part of the loan which is due to be repaid within 1 year, we call it to be current. And those which are due to be repaid after 1 year, they are going to be non-current. The bank confirmation letter will provide details of the loan held, the amount outstanding, accrued interest, any security provided in relation to those. So if you talk to banker, you get information about all of this: outstanding amount, interest, security, everything. Third-party evidence also will be available in the form of bank confirmation letter and original loan agreement. The loan agreement is also a third party only, because loan agreement comes from the bank. So it is again a third party thing. Okay, so that is also considered to be a reliable evidence. Now, this particular part, they have given a very nice understanding. Look at the procedure. Obtain a breakdown of all the loans outstanding at the year end, cast to verify arithmetical accuracy, and agree, okay, to the total of financial statement. So here they are giving you a proper understanding about how you are going to break down all the loans. If there are 5 loans, break all of them. Okay, cast to verify arithmetical accuracy and agree to the total of the financial statement. So once you break up, look into their balances and then add up together. This total should match with your total bank balance, bank loan which is available in the balance sheet. Okay, this will help you to understand completeness. That means all the bank loans are taken into account. Then agree the balances outstanding to the bank confirmation. So whatever bank has given confirmation, if you agree the balance, you'll be able to understand if they're accurate, value, and really whether such kind of obligation is there or not there. Inspect the bank confirmation letter for any loans listed that have not been included. Again, completeness. So like that, if you look at it, you will see that all of these are like one more example to give you here. They're telling inspect the cash book for the loan repayment. So loan repayments also happen. So when loans are repaid, you'll be able to understand some amount is going out for the purpose of loan, that the loan is existing. How much amount? So it is accurately paid. And also how much the outstanding valuation also you'll be able to understand. Okay. So basically when you go in for a detailed understanding of all these procedures, which I've taught in detail when you go through the full-fledged lectures which are available, if you see I've taken every pointer and explained in detail, that time you'll understand how these procedures have to be included. So now, as of now, the only thing that you take home or the only thing you understand here is how you have to first pick up the proper assertion, then understand what are the sources of evidences available, and finally you should know how a particular assertion will be checked. Okay. And all these procedures are which one? They're substantive audit procedures. So they will be on the balance sheet items only. Okay. So that has to be very clearly understood by you. All right. So let us continue further. So we have taken 2 balance sheet items just for a quick recap for you. The bank and cash and non-current liabilities. Okay. Then moving further, we talk about the provisions and contingencies. Now, provisions and contingencies we talk about through IFRS, that is 37, which talks about provisions and contingencies. And we know provisions will be recorded only if there is a probability of outflow and there is an event already existing and you are able to, there's some scope of measurement of this amount. Okay, obviously precise measurement will not be there, but there is a possibility of an outflow and which could be measurable. Then in that case, you require to create a provision. And contingencies where there's no much of probability of it being an outflow, but there could be a situation like that. So we call it to be contingencies. So there could be contingent asset, contingent liability. If it is a contingent liability, you only show it as a disclosure to the notes to account. And contingent asset, understand, only possibility is not enough. There should be a virtual certainty. It should be a possibility that yes, you are going to receive, there is going to be an inflow. Only then it can be recorded as a disclosure can be given about the contingent asset. Otherwise, you cannot give. So provisions, contingent asset, contingent liability, you have IAS 37, which talks about it. And it is the auditor's duty to ensure when provisions are recorded, is really they're considered to be provision. Can you record them as provision? Is the valuation done correctly? Is the presentation correct? Contingent assets, liabilities, are they meeting the criteria or not? Whether the presentation of the client, whether the actual amount written by the client, whether they're reasonable or not, whether they should really disclose them or not, do they meet the criteria of showing it as a provision, contingent asset, contingent liability, which is given by the accounting standard. If it is met, only then it can be disclosed or it can be shown in the financial statement. Otherwise, you cannot. So here the auditor's responsibility will be that to ensure, do they meet the criteria of IAS 37 to be recorded as provision, contingent asset or contingent liability. So you need to obtain evidences regarding the fact, and only then these items, if they're appearing in the financial statement, we say that yes, they're acceptable, that they're there. Okay, so that will be done as per IAS 37. Okay, so here also we have a quick reading of the provisions and contingencies, some part, and then second we talk about the accounting estimate. These 2 readings will take it together. Now, accounting of estimates, one of the very crucial part for the auditor. Reason being, estimate, by the very word itself, you understand that there is not going to be any precise means of measurement. These are estimates made by the management. These are some kind of approximation made by the management. So obviously it is one of the risky areas. So auditor, by the very nature of the estimates, he will understand that this particular area he has to look into for the reasonableness of the accounting estimate. So he has to inquire with the management about what are the assumptions taken by them. He will try to obtain the understanding of the industry, about the environment in which the entity is operating, what are the previous year's outcome of the provisions which they have made or the estimates that they have calculated. Did their estimates of the previous year match with the actual things that happened? Did they make any kind of corresponding changes? Current year estimates are reasonable or not? Assumptions what they're taking up, are they reasonable or not? So auditor is going to do n number of checking with respect to the understanding whether estimates are acceptable or not. Obviously, what you think and what they think shall not be same 100%, but obviously there has to be a reasonableness. If you are thinking 3% and they are taking 25%, then this is not acceptable. So basically, though it is an estimate, though precise means of measurement is not available, that does not mean management can write anything, have any kind of assumption. So as an auditor, it is your responsibility that you actually inquire with the management, understand how they have calculated, why this number is taken, what are their assumptions, what was the previous year estimate and the actual output, was it reasonable or not. You as an auditor develop a point range. Okay, what should be reasonable? Then you develop an expectation and then question to the management. So that will be your responsibility with respect to estimates. Estimates are like provisions, estimation are like depreciation. Okay, these all you need to have a question with the management. Also written representations you have to take with respect to the estimates. Okay, so with this, let us have a reading of what is available with respect to provisions and contingencies and accounting estimates. Okay, so look at this. IAS 37 talks about provisions and contingencies. Okay, and they tell about provisions, contingent liability, contingent asset requires an entity to recognize a provision. Provision when you can recognize only if there is a present obligation arising as at a past event. Okay, so if there is really an obligation existing today, only then you create a provision. Remember this for the question that we are going to take up later on, that there should be really an obligation, then only provision can be created. Then payment should be probable as in more likely to be there than not to be there. Okay, an amount can be estimated with a reasonable with a reliability. So there is some calculation available with us, amount can be justified. If payment is only possible, it is contingent liability, and liability will be shown as a notes to the financial statement. Similarly, contingent asset can be recognized only if it is virtually certain. Virtually certain means sure to receive it. Okay, only then you're going to write it. It is probable that an inflow of economic benefits will result. A disclosure should be made in the financial statement. If it is only possible, it should be ignored completely. So probability should be there. That means virtually certain. More possibility of it happening than not happening. Okay, so that is regarding provisions and contingencies. You have to understand the recording as per the applicable standard IAS 37 and see whether actually the standards criteria has been met or not. Only based on that, the auditor will check whether it is correctly recorded or not. Okay, then this becomes a very important discussion for us regarding accounting estimates. See, there are many accounting estimates in the financial statement, like you have allowances, that is provisions, you have depreciation. Okay, there are other provisions also. Okay, reserve for doubtful debts and all. These are all considered to be estimates. Accounting estimates inherently, that is by very nature only they are risky because they relate to future events and therefore documentary evidence will be very limited. This makes it difficult for the auditor to obtain sufficient appropriate evidence regarding the balance, because when it is about future, you don't have evidences only. Correct? Then inherent risk is increased because management judgment is needed to be determining the accounting estimates. As a result, estimate may be used to manipulate the financial statement to show the desired result. The understanding is, for every particular item, you take salary, you take purchase, you take maintenance cost, you take repairs, you take any other cost, commission, income, expenses, whatever. For everything, supporting document will be there. But provisions, estimates are only those particular items in the financial statement for which supporting documentation will not be available. So this is a particular area where management can easily do manipulation. If they want more profits, they can reduce it. If they want lesser profits, they can increase it. So this figure they can play very easily because supporting documentations will not be there. Okay, so for this, the auditor has to obtain the understanding of the environment, internal controls based on that. Okay, so you should have a very good internal control on those people or that group which is going to come up with the estimate calculation. Okay, then depending upon the uncertainty, he will decide complexity involved, degree of complexity involved. Based on that, he will decide whether how risky it is. Okay, then obtain evidences from subsequent events. So basically provisions and all, how appropriate they are or how reasonable they are, you'll be able to understand after the year end also. By some events happening, okay, you'll be able to understand whether provisions are correctly calculated or not. test how management has done the estimate, and develop auditor's point range. Point estimate means auditor also has to make a reasonable estimate in his mind. Yeah, this should be reasonable. If that is considered and if it comes within that particular range, like if I say 3 to 5% is reasonable, okay, and if suppose management has taken 8%, then I'll say no, 3 to 5 is something reasonable by doing all the study. So 8% what the management is telling, we will not consider it to be reasonable. Okay, and then we'll start raising questions with the management. Correct. So that is regarding what provisions, with regard to accounting estimates, which are one of the major areas where the auditor has to be very sure and procedures have to be adopted more appropriately. Okay, then one more example I've taken with respect to dividend. So dividend comes as a part of shareholders funds. Basically here they're talking about all of that. So they have classified as P&L account items, balance sheet items, and then shareholders. In shareholders, they have taken dividends. Okay. So how do you understand about dividends? What are the source available? Obviously, dividends are always recommended by the board. So you'll have the board minutes. Dividends are paid through the bank statements. So bank transactions, so bank statements are available. And every receiver will get a dividend warrant. So these are all the sources through which you'll be able to understand whether dividend was really paid, what was the amount of dividends, whether it was actually paid or not, all of that thing. So inspect the board minutes to agree dividends declared before the year end. Inspect bank statement whether dividends were really paid before the year end. Inspect dividend warrant to agree the dividend payment. Only if dividend warrants are issued, that actually payment is made. Okay, so that is all with regard to dividends also. That's quite simple. Okay, so let's continue with the next part of it. Then audit of dividend. Now, procedure for checking P&L account items. Now, as we checked already the balance sheet items, on the same line, we also check the P&L account items. So P&L also, we can take payroll as an example. And in payroll also, first you're going to fix up all the assertions that you're going to check. Then you look for the sources of, evidences available. And based on that, you're going to perform the procedures. So quickly let us go through it. You'll understand what it is. So again, the concept will remain the same. You can see that you are first picking up the assertion. Okay, so the assertions are completeness, whether all the payments are real, all employees have been included and there is no overstatement and all that. Accuracy, okay, calculation should be correct, and occurrence, whether really such payment is due to be paid or not. Did it occur during the current year? Sources of evidences are many. You have payroll payroll control account is there. You have payroll payment listing is there. Pay slips are available. Contracts of employment are there. Hourly rates, okay. Timesheets are available. Bank statements, starters and leavers form, that is people who joined and people who left. So there are multiple documents in the organization available to ensure about payroll. Okay, payroll control count is nothing but how many people working in not attendance, so you can talk, or maybe payment listing is a number of employees along with that, which department they are working and all. So you'll have a proper list available. So based on that, you can correlate very easily and understand that all the employees genuinely are included. Dummy are not there. Fictitious employees are not recorded. Some employees are not been omitted. A lot of things can be understood. Okay. Procedure, we can pick up one or two for an understanding. Let us take the few ones. Okay. Recalculate statutory deductions to confirm. Statutory deductions are nothing but TDS. Okay. Or you can talk about provident fund. Okay. These are all statutory deductions. By law, you have to deduct it from the employee salary. So recalculate statutory deductions to confirm whether correct deductions for this year have been included in the payroll expense. Okay. That will talk about accuracy of the payment. Then for salaries, agree the total net pay per payroll record to the bank transfer listing of payment and to the cash book. So basically, net pay from the bank transactions and through the cash book. Okay, when you correlate, you'll understand really it has been paid or not. So occurrence. Okay, so like that, multiple things are there. This obviously, when you go to the full-fledged lecture, you can just have a good learning through that particular lecture available, where too much in detail I've picked up every particular aspect of the assertion, and we have done a detailed discussion. Okay, so once you go through those lectures, I think this all will be very simplified for you to understand. All right. So that is regarding how you check for the payroll. Okay. Continuing with it, audit of smaller entities. Now in smaller entities, the procedure for audit is going to be a little different. We don't go in for checking of controls much, because they'll not even have much of internal controls, because entities are very small. They will believe that the cost is more and benefit is less of having internal controls. So these are the particular areas where directly the auditor can go for substantive checking. More of transactions can be checked. More of procedures can be performed directly on the financial statement items. Okay, lesser number of transactions will be there, so more detailed checking will be there. Smaller entities, substantive procedures could be more detailed ones. Okay, because controls also you don't check. Full concentration could be on substantive checking. Okay, and also there are lesser number of transactions when compared to the bigger entities. So substantive procedures can be adopted easily when it comes to smaller entities. Okay, then Audit for not-for-profit organizations, NPOs, audit will be basically focusing on the income, basically focusing on, how the income is used, because here you cannot have shareholders. There are not going to be a dividend distribution to them. Whatever profit you're going to earn, that will be given for the purpose for which you formed. So whether when charities are done and all, accountability is there or not, genuinely all the money has been taken into account or not. Because see, people running NPOs are all volunteers. So basically, we don't expect them to be very sincere enough to maintain all the controls, look after the control, monitor the control, and all that. So here, the auditor's perspective is to check whether controls are really operating and whether actually all the records have been happening correctly or not, charity amount has been properly used or not, whether accounting treatment is happening correctly to all the donations and all of that. So basically, NPO, when you talk about in auditing perspective, the concept will remain the same, but the approach will change. Okay, so let us have a quick reading of the audit of NPO, how it happens. Okay, very simple. Just for you to have a glance of it, we'll do it once. If we look at this audit of not-for-profit organizations, so NPO organization include charities, public sector entities. I told you some of the important points are profit maximization is not their objective. There are no shareholders, and dividends will never be distributed. Their financial statement will not have P&L account. In fact, they'll have income and expenditure account. They'll have balance sheet, cash flow statement, notes to account, just like any other business organization. So as an auditor, substantive audit procedures will be performed on all these items appearing in all these statements. Control risk, I told you that it's going to be high here because obviously you don't have effective controls, because entire organization is managed by the volunteers, and these are going to be the trustees who are the volunteers and all. They will not be giving that much time adequately to look into the strategic directions of the organization. There will be lack of segregation of duty because no much people will be working. One person only will handle major part of the activities. Then the use of volunteers who are likely unqualified. So these are all people who are coming out of choice. So the qualification we don't check. They come as a part of social service. And there are less formalized systems and controls. So control risk will be really high. Okay, then your income checking will depending, because it's charities and all, we have donations and all, theft, there could be a greater chance of theft. So the auditor has to ensure whether all the amount received are properly recorded and all. Restricted funds are there. So it's the auditor's duty to ensure when donations are received for a particular purpose. First of all, accounting treatment should be correct. That means they have been recorded as per the requirement of the standards. That means when they're specific, they'll be appearing as a liability. And when they are revenue, general, you can take it to the P&L as income, right? So in balance sheet, you have to show it properly that they are specific donations and they can be used only for the particular purpose. Like, for example, if you receive for building construction, it can be used only for building. Until then, the donation will be shown as a liability only. Correct? So the accounting treatment for that has to be ensured by the auditor. Going concern, we check for every business. So here also it is common that we are going to check. See, there is complexity in regulation. So the auditor has to be very clear regarding checking of the laws and regulation, especially taxation and all, because these come under the exemption criteria. So as an auditor, it becomes important for you to obtain sufficient appropriate evidences regarding whether compliance with the regulatory bodies have been done or not. Okay, you require a lot of experience here. NPO audit every person cannot do. You need to have a good information about the regulations and the law governing the NPO. So you have to have that kind of knowledge. Only then you'll be in a better position to do the audit of this complex environment. Okay, then. And obviously, same way you do inquiry, inspection, analytical procedures, you perform all of that. Yeah, one important point which I missed out in telling when we spoke about the procedures of the P&L account items. Okay, basically I missed out it here. Okay, one of the important things that you need to understand. If you talk about analytical procedures we know you perform on planning stage also, you perform at the performance level also, and also at the time of conclusion before the report is given also, you perform analytical procedures. So those analytical procedures which are performed during the course of audit, we call it to be substantive analytical procedures. Understand, whenever you do P&L account checking, so you talk about salaries, you talk about salaries, you talk about sales, purchases. Okay, all of these, whenever you're checking, you always perform analytical procedures to understand if there is a risk of material misstatement. Because these are the particular items which are going to come throughout the year-on-year basis. So there is a possibility that they are predictable over a period of time, and you'll be able to demonstrate through a trend and all that. So you can just create ratios and you can do comparison of the 2 years. So when you're checking, P&L account items, you can definitely perform analytical procedures. Balance sheet items, analytical procedures will not be recommended because there could be some items which past figures are not available only. Okay, building is taken this year only, previous year the building will not be there. So comparison not possible. Okay, however, there is other way through which you can do comparison, but more ideally for P&L account items, analytical procedures will be recommended. So whenever you give answer for payroll, sales, purchase and all, you always introduce one point regarding analytical procedures as a mandatory part of doing the audit. Okay, all right. So this is with regard to the entire topic of procedures, okay, wherein we spoke about what you mean by procedures. These are all the actions applied on the sources so that you obtain the evidences. How, when, what has to be done is to be checked here. First of all, you should be very clear with which assertion you're checking. Then you also go in for directional testing, where one you check automatically, other will get tested. Then we picked up some balance sheet items, some with the provisions and contingencies, accounting estimates. Then also dividend part I've taken for you. And then P&L account items, how do you check? One of the examples is payroll. Then smaller entities, what is the difference when compared to the overall other entities? NPOs, what is the unique criteria? Okay. Once again, for repetition purpose, I'm telling these are revision sessions will make absolute sense to you when you have gone through the comprehensive discussions that we have had through the syllabus. Okay. All right. So we'll now pick up a question from the exam kit. Okay. We'll pick up the question and then understand it properly and then look into for the answer. Okay. From this particular topic of procedures, very rarely you're going to see a question in the section A part. I don't expect a question coming from this topic of procedures in the section A. Objective type of questions don't come from this topic basically. So you can expect a question or you will have a question from this topic in the section B part, descriptive questions. So questions will come of this 20 markers or the 30 mark question that is there. That will be coming from this particular topic. Okay, so descriptive part, that is the MCQ part, the first 30 marks, that is the first 3 MCQ based questions, this topic will not be touched upon. So you can prepare this topic keeping into mind, it will be tested in the section B, that is descriptive part of questioning. Okay, so let us take a question and understand the way you need to give the answer. This scenario relates to 6 requirements. Okay, so we're taking question number 242, which is about the procedures topic only. So I particularly picked it up. It is 1st July 2015, Dashing Company manufactures women's clothing and its year end was 30th of April 2015. You are an audit supervisor of Jaunty and Company and the year end audit of Dashing Company is due to commence shortly. So you are the audit manager of this particular firm and you are going to do the audit. You're going to begin the audit of Dashing Company. The draft of financial statement recognize profit before tax to be $2.6 million and total asset to be $18 million. So they have given you asset figure and profit before tax figures. Why? We'll see that later. You have been given responsibility for auditing receivables, which is a material balance. And as a part of the audit approach, a positive receivable circularization is to be sent. So they're telling you are going to check what? Audit receivables. So you're going to audit receivables. That means trade receivable is what they have told you to check. For that, you're going into a procedure which is positive circularization. That is, you're going for external confirmation. That is positive confirmation. And by now, you should understand what is the meaning of positive confirmation. When you send a confirmation request to the client and when you send a confirmation request to the third party, that is debtor, and the debtor is supposed to reply whether he agrees or he disagrees. Okay, so that is positive circularization, that is positive external confirmation. Then, at the planning meeting, the finance director of Dashing Company informed the audit engagement partner that the company was closing one of its smaller production site, and as a result, a number of employees would be redundant. So they are closing a part of their business, they're discontinuing an operation, and because of which the employees working in that particular department, they are retrenching them. So there is going to be a redundancy. A redundancy provision is created at $110,000. And it is included in the draft financial statement. Okay, so they have given you 2 things. One is that you're going to check for the trade receivables, and second, they're talking about a provision created by the management. Okay, now, first question. Describe the steps the auditor should perform in undertaking a positive receivable circularization for Dashing Company. Now, this is that they're telling you how will the auditor, what are the steps involved by the auditor in order to send positive receivable circularization? That is external confirmation you have to send. So what is the steps involved? So this, when you remember the regular classes that we have done, I've done this in detail and I've told you that whenever the auditor intends to go in for a positive confirmation request, first of all, you have to obtain the entire list of debtors from the management. So management will give you the list of the debtors and you have to confirm about its completeness. Out of these debtors, by doing some kind of or keeping some factors in mind, you are going to select few of them, looking into the size of it or looking into the bad debts or maybe the outstanding dues and all. Some criteria you keep in mind where risk will be involved, and you will pick up few of the debtors. Then you will request the management to prepare a representation letter, that is a confirmation letter. Okay, and you'll ask them to send it to whom? To the third party. But in the letter, you'll clearly write, the management will clearly mention that this particular request, when it is reaching to the third party is directly required to respond to whom? The auditor. So this is a very simple answer to write. What are the steps involved in performing or undertaking sending of positive receivable circularization. Okay, then. The second question is talking about describe substantive procedure other than receivable circularization. That is already one we have provided here. The auditor should perform to obtain sufficient appropriate audit evidence to verify each of the following assertions. So they have given you different assertions, and for each assertion, what procedure you will follow. It is for what purpose? Substantive procedure other than receivable to auditor to perform and operate regarding receivables. Okay, so regarding receivables accuracy, receivables valuation, receivables allocation, completeness of the receivables, and rights and obligation. Okay, total marks will be split based on all the three, so 2 marks each. It's 6 marker, 2 2 2. Okay, so to check the accuracy, what are you going to put the steps as? For valuation, for allocation. Okay, based on what are you going to obtain the evidences that the accuracy is there, valuation has been done correctly or not. So here you check for the recoverability of the debtors. You'll understand what is the provision created, whether provision is reasonable or not. So with that, you'll be able to understand whether it is, accurate or not. So you'll see long outstanding dues. If they're long outstanding, that means provision has to be created. How much provision has to be created? All of that you'll be able to understand. Completeness you'll be able to understand only if you see whether every type of receivable or every sale has been taken into account, every credit sale, and every debtor is taken into account. So whenever you look into the bank statements and all, you'll be able to understand whether payments have been received or still not received. And therefore, with that, you'll be able to understand complete record has been taken. Rights and obligation, whether really you have the right of receiving. So for that also, you'll be able to perform the procedures to obtain an evidence whether really the organization has a right, okay, to receive it. So for this, you can look at the existence. So external confirmation also could be an example here, where existence is checked. But you cannot give the answer for external confirmation because they're telling other than receivable circularization. Okay, then. So we'll look at the answer about this. Don't worry, we'll go to the answer and check in detail about it. Describe substantive procedure the auditor should perform to obtain sufficient appropriate audit evidence in relation to redundancy provision at the year end. See, what are the procedures to be performed? First of all, very important is that redundancy provision, it is a provision. So you have to understand as per IAS 37, provision can be created only if there is an existing obligation of some past event. So is there a past event here? The answer is yes. There is one of the particular a production site which is going to be closed and number of employees would be made redundant. So there is one of the decision taken. So there is a past event, but obviously you have to take a confirmation from the management whether really a declaration, a real declaration has been given by them or not for the purpose of such kind of announcement is officially made or not, to ensure that the people really know they're going to wind up. That is first of all an evidence that really this kind of event is there. Then see what is the probability of what is the number of employees that are going to get redundant, calculate the amount which the employees should have. And based on that, the calculation, you'll decide what should be the redundancy provision. So if 10 employees are there and how much amount has to be paid to them as a part of termination of theirs, in their document, when offer letter is given, in that they will write if there is a termination like that, so much amount will be giving as compensation and all. So looking at those termination letters and all, you'll be able to decide what is the redundancy provision appropriate or reasonable. So all of this will help you understand that whether the redundancy provision of $110,000, whether it is appropriate, reasonable or not. Okay. So through understanding about really announcement is made and all, okay, based on that, you'll decide whether it is acceptable to have the provision or not. Now, further, one more question is given to you. A few months have now passed and the audit team is performing the audit field work, including audit procedure, which you recommended over the redundancy provision. The team has calculated, so you gave the recommendation right now. Check for the official announcement, check whether really announcement was made or not. Okay, see how many number of employees are leaving because of that. Okay, what would be the calculation based on their offer letter? So these are all the procedures that you actually told. Based on that, your team was performing. And when the team performed, the team has actually calculated that the necessary provision should amount to $305,000. This is what they're telling. The finance director is not willing to adjust the draft financial statement. They have done 110. You are saying 305. And when you went and told it to the finance manager, to the management, when you went and told, management says will not do the rectification. Will this impact your auditor's opinion or not is the question. Discuss the issue and describe the impact on the auditor's report, if any, if this issue remains unresolved. That means now we have to tell, first of all, this issue is what? 305. Okay. They have done 110. Difference you have to check and see how much is the difference. Now, in the beginning of the question, they had given us two figures regarding profit before tax and total assets. These were not given as additional information or little extra knowledge for us. This is given for us to understand regarding the difference, whether it is material or not. So based on that, you have to pick up whether this particular amount is material or not. And if it is material, then obviously we'll go in for giving a modified report. And if it is not material, then we'll go in for giving an unmodified report. Also understand redundancy provision, if it is happening to be pervasive, then you can go on giving a adverse opinion. But we don't go for adverse opinion here because we're telling only one particular provision is wrong and you very clearly know what is wrong. So you can end up giving a modified opinion, that is qualified opinion. And whenever you give qualified opinion, then in the basis for qualified opinion, you have to give the reason for the same. Correct? So that is the way you understand this. Okay. So I think we have discussed all of them. Now we'll actually go to the answer appearing in the exam kit so that you actually get an understanding of how it has to be written. Okay. First of all, the key answer tips are given to you. This you don't have to read also, but just I'll help you go through it. So the question first is about how you obtain receivable circularization. For that, you as a person who's writing the exam should think methodological approach. Think in your mind what all will be doing to obtain the external confirmation. Part B requires substantive procedures over specific assertion. So you have to understand, okay, assertion is accuracy. To check the accuracy, I have to look into calculation. Calculation from where will I get? I have to look at the completeness. How will I understand everything is taken into account? Nothing is omitted, nothing is overstated. What will I check? So you have the specific assertion in your mind. Based on that, you start suggesting about the procedure. Then part C is talking about redundancy provision. So is redundancy provision acceptable or not? How you will think about it? Is it allowed or not? Can you create a provision? For that, you have a standard, that is IAS 37, which is going to talk about when are you allowed to create a provision. See whether those standards criteria are met or not. That you will check. Correct? Then part D talks about what you have identified and what they have calculated is not matching. So you see the difference. And if the difference happens to be material, then you go for qualified opinion. Material, how you'll understand? You'll be able to calculate the materiality looking at the profit before tax, or you have the asset balance available. So you apply a percentage on that and decide what could be material. Okay. Now, so based on that, look at the steps in undertaking. As I told you, obtain the consent of the finance director first. Okay. They should allow you to go for advancing circularization. Then obtain full list of trade receivables. Pick some samples from there. Then ask the management to prepare the letter. The management should be requested to sign all the letters. If no response is received, you have to go for follow-up. Why? Because it is a positive confirmation. So if no response is received, you have to do follow-up. And when replies are received, and suppose if that data what is received and what is there in the financial statement, if they don't match, then you have to investigate further. Got it? This we have done in the regular classes. So I think you'll be able to catch it very easily. Okay, then receivables, if you want to check accuracy, valuation and all, for all of this, you have to look into for provision, and provision you'll be able to understand through the aged receivables. So that is regarding slow moving balances. So based on the slow moving balances, you'll be able to understand regarding the credit control manager. You can have a discussion with him and you'll understand which are slow moving, which are aged ones. So based on that, you'll be able to create a provision, and these provisions will help you understand whether calculation is accurate, valuation is correct, and proper allocation is happening or not. Okay, based on which are old, new and all that. Okay, and obviously provisions are decided by the board. So you can go for the board meeting checking also. Okay, then. How do you understand the completeness of the receivables? You have the good dispatch notes. You have sales invoices available with you. You have the receivable listing available with you. So based on that, you can do all cross verification and understand whether all the numbers are taken into account or not, whether they are complete in every respect or not. So look at the good dispatch notice there. Then receivable ledger accounts are there. Okay, prior year receivable listing. Okay, compare it with the years. Discuss with the management for missing receivables. Okay, then reclassification as payables. Sometimes it becomes payable also because there could be some person with whom we are buying and selling together. Okay, so reclassification has to be taken care of. Rights and obligation, I told you, external confirmation is the classic answer here. So getting confirmation from the bank, okay, you'll be able to understand about rights. Obligation, it's a loan. Review board meetings, everything will be decided by the board. So board meeting minutes will be very important. For a sample of receivables, agree the balance recorded on the receivable ledger to the original name of the customer and the sales order. So this is a detailed one where you're tracking so many things. Receivable ledger to the original name of the customer, and you're again tracing it with the order or the contract. Got it? So all these multiple checkings, if you do, you'll understand, you have the right of receiving it. Okay, so that is regarding how you check it. Okay, redundancy provision, I told you have to discuss with the management whether really announcement is made or not, because if that event is not existing, provision cannot be created only. Discuss with the directors of dashing company as to whether they have formally done the announcement of their intention to close the production site and make their employees redundant to confirm there is a real present obligation. If announced before the year end, review the supporting documentation to verify the decision. Board meetings have to be checked for the probable redundancy payments and obtain the breakdown of the redundancy calculations. So every employee will have its own set of calculations done as per their offer letters and all that. So based on that, the calculation should be checked whether appropriate or not. Recalculate the redundancy provision to check for the completeness. Review and check whether really payments have been made or not. This is the responsibility of the management to obtain return representation. And obviously, provision is covered by this particular standard. So disclosure should happen as per this particular standard only. So that is all the duty of whom? The auditor. Correct? Then. Moving on to the next one, impact on the auditor's report. Obviously, we decided 305 is correct. They are telling 110 is correct. So we need to see if it is material. If it is material, we'll change the opinion. The provision included is 110. It should be 305. Hence, an adjustment of 195 is required, which presents 7.5% of PBT or 1.1% of total asset. Obviously, 7.5% of PBT and 1.1% of total asset is obviously material. Correct? But obviously, there is nothing else which is wrong. So we don't call it to be pervasive. So we can go in for qualified opinion. Okay. And obviously, when you go for qualified opinion, you use the language except for this particular item. Everything else is showing a true and fair view. Okay. And in the audit report, you have the separate section called as basis for qualified opinion. And in the basis for qualified opinion, you're going to explain the material misstatement in relation to redundancy provision and the effect on the financial statement. The effect on the financial statement is that the profit is going to be overstated by $195,000. Okay. So that is going to be the answer that you give. All right. So this is a full-fledged question of 20 marks. Okay. Understand if you're conceptually strong, this you can also attempt quite flexibly, like you'll have the kind of ease of writing. I'll not say easy, that is overstatement. Okay, that is not going to be easy because this topic has so many of things to be remembered. There are so many pointers to be highlighted. You should be able to think strongly at that point in time. Yeah, for this particular assertion, this particular procedure. Trust me, how much ever you try, this particular topic, unless and until you revise for a minimum of 3 times, you will not be able to draft an answer. Okay, so that one point you have to be very careful of. Okay, now just particularly for this topic of audit and assurance, that is the topic of procedures, there are some very important points which I want to tell you. Whenever you talk about the other topics, like you have ethics and acceptance, you have topics like internal control, you have topic like evidence and all, these are all exhaustive topics wherein you start at one point, you end at one point. Okay, and whatever content is given is limited. But then what happens when you talk about this topic of procedures, every student will have his own perception, will have his own way of understanding the question and giving the answer. Sometime what procedure I write and what procedure you write could be different. Same assertion we are checking, but procedure could be different. And both could be correct. So basically here, one reading of the topic will never help you. First reading of the topic, you'll find it to be very bulky. You'll find it to be never ending. And you'll feel how to remember all this. Trust me, don't remember. You have to imagine yourself to be an auditor. You have to visualize that, yes, if I was the auditor, if I'm in the client's location, if I have receivables to check, I know with receivables what all documents will be available. Let me check these documents. How these documents I have to check. In these documents, what details will be available? Will these details help me to understand completeness? Will it help me understand about accuracy? Will they help me understand about rights and obligation? What is it? Like, for example, if I talk about buildings and I tell you, you have to check the existence of the building. For that, I will not go and check the title deeds. I know title deeds are available, but if I want to check the ownership of the building is with the management or not, or with the client or not, for that I will look into title documents. So basically, you have to be very clear that whatever question is asked, you should be able to develop a thinking in your mind. If this topic you try to by heart, exam, it is not going to help you. So this topic, first time you listen to the lecture, which is completely available on the portal. So this full topic, which has been done in detail, almost 7 to 8 classes have gone through the discussion of only this particular topic because we have picked up every single procedure in detail. Second, you go through the revision session. And then at your end also, you are required to do this topic twice or thrice. And every time you do, trust me, you will keep on reading it only. Some points you try to recollect in your mind. Sometime you make a situation or look at the question and give an answer to yourself. This is the ideal way through which you prepare this topic. Do not think like how I spoke about controls. Yeah, there is a concept involved. This is what I have to write. This is the deficiency I identify. This is the way I have to give the answer. So there's a very limited understanding where you have to understand that particular point and you populate in the paper. Procedures is not like that. Procedures, first of all, person to person, the thinking will change. The visualization has to be very, very strong. So I would strongly recommend that when you do this particular topic, you actually have an imagination in your mind. Only then this topic will make sense to you. Trust me, the Kaplan material that you have, the study text, as well as the exam kit, has so many questions for your understanding. In the main topic also, there have been so many test questions for practice, which all have taken through in the class. Second, in the end of the study material, there are question and answers at last, where a lot of questions have been still included. There also you have questions based on this topic. Plus, in the exam kit also, there are so many questions. So I would believe strongly, if you go through all of them and you practice them properly, trust me, this topic can be handled very easily. So do not look at the length of it. Do not look at the structure of it. Obviously, if you start looking at that, you'll find it very difficult. You make an understanding. I should understand the assertion. I should understand what are the evidences, sources available, and then what procedure I have to perform. If this you can visualize, this topic would become a very simple part. Okay. Rather in the exam scoring part, this topic could be considered. Okay. So procedures, trust me, you will be able to think, visualize, and write the answer. And this topic, as I told, do not expect a question in the section A part. You'll not have MCQ questions coming from this topic. So definitely descriptive, one question will come from here. It could be 30 marker, it could be 20 marker, but definitely you'll have a question from this topic. So learning it, understanding it, visualizing it in the correct direction becomes very, very important. All right. So with this, we will close the discussion with regard to the topic of procedures. Okay. And I believe what we have done now would be sufficiently enough for the revision purpose. Okay. Please practice at your end. More than reading of the theory, practice more of questions when it comes to this particular topic. All right. So with this, we'll wind up the session here. If there are any doubts, you can reach out to me. All right. Yes.